Hey, hello everyone. Welcome to today's video. It is the 4th of November. Let's start by addressing the most obvious chart in here, the elephant in the room, which is the chart of Bitcoin. And we'll go and take a look at the wave count. I want to show you a couple of things, but in terms of kind of a technical perspective here with the moving averages, RSI volume, things continue to deteriorate following kind of yesterday's sell-off and close right at those limits near 106, and today we broke, and we also broke just slightly below the 100k level, trying to pull back a little bit. So if you notice, we are quite close to these lows from back in June 22nd. I think we're probably going to hold here at least for a decent bounce, maybe a push back towards I would say maybe a 104. We'll see, but every time you break below a key moving average, I mean, especially the longer term one, market starts to act dangerous, and that's why this is a pretty big guardrail for pricing, right? The 50-day, it's a bit more. It's kind of the first alarm signal, and then the 200-day. Once you break below that, things can get quite dangerous. So in here, we lost pretty much all of them, and the market started to accelerate a little lower. But listen, I don't think there is much of a reason to panic in here in Bitcoin. I think we're still looking fairly decent. I'll show you what I'm thinking. Definitely, it's not an environment where you want to trade it from the long side, because there's no signal in here just yet, and I think it needs at least several days, if not maybe even a week, depending on if we're getting any reaction from this level higher. But for anyone that would want to get long somewhat on the safer side, a few days need to pass for this to kind of base out and to try to turn, create some signals, try to overtake some of these averages. So it's going to take some time to kind of churn this price action too. It doesn't mean that we're going to completely collapse now, but you know things are not going to be that easy from the long side, just kind of by the way this chart looks. So I just want to kind of create some kind of an expectation here in terms of price, and I'm sure most of that it takes time to repair the damage. I mean, look, if you look back into this correction back here, which is just a nice simple ABC. All of a sudden you got a day where it was a little bit of a different decline, maybe not as aggressive as this one, but all you had to do is just get a couple of days, few days of buying, and then you broke above the top of this B wave, and then you were on your way to new high. So for me, I was saying today on Discord, if I can see a move back above 107, 108 even, I would be willing to give it a try on the long side, just very, very small, to kind of test the waters. But even that, I think it's a bit dangerous. Ideally, you want the market to kind of get back above there. So that's going to take a little bit of time. Now, let's go ahead and take a look at the wave funds. Oh, before we do, I wanted to take a look at the weekly time frames. Let me just kind of move this out of the way. Where are you? That's what I'm looking for, mostly here. I mean, I guess, yeah, we can even look at not at the monthly. We're too far from there. But this is the 40-week. What I wanted to show you, the 52-week moving average, which is quite important. I know we kind of cracked below the 40, and I find this on my back here on my motive wave, and I have it right here. So I'm gonna just kind of make this a bit larger so you can kind of see. It is important what happened. So we tested this average several times in the past, and every time we did, we kind of were at about 50, maybe 45 RSI. And when you are looking at the weekly time frames, those are extremely important levels for uptrends. And usually, if the uptrend continues to remain strong, those are places where you could find interest from the market. Now, in previous instances, I can go to the daily time frame and kind of see how this looked as this was kind of getting approached, and how many days it took for this to kind of bounce back. In here we took several weeks of being close to that 52-week moving average before we broke below it quickly, and then we bounced back, creating this nice little hammer. And right now we're basically fully red. We have a little bit of a bounce back, but not a lot. Now today's only Tuesday. There's plenty of days until this week ends. And short of this being a massive red candle lower, which I don't think we will get, there is a chance that this could end up being looking something like this, or even if it stays red and we're just kind of going sideways for the rest of the week, the following week you get a blue candle next to it, or a black candle, however you want to call it, green candle, and then you can bounce, hold this level, and continue to go higher. So what's happening right here is not very pleasant at the moment. I'm looking at the 45 RSI. I want this to not get below that 40. And the market is literally being tested right now. We're seeing, right here, who's showing up, and if we're getting, any buys coming in of any interest. So again, I don't want to be the hero that's going to buy right here. I want, you know, whoever wants to buy in here would see the people that maybe have a lot more funds, or they have different strategies. I don't know, but I'm not in the business of trying to pick the lows here, because you can get burned. So I'm not going to take that risk. I would let somebody else be those heroes. Now that's why these levels 98 to 64, or a bit lower than that, it's being tested right now, which is the swing from this week back here. And it seems to be tested. We'll see how we close. Now let's go and take a look at the wave counts, and I want to show you a couple of things. Basically, we're focusing just for the moment, and I'm going to zoom out a little bit, here shortly, but I'm focusing on this move in here, on this cute impulse, right, with an extended wave 1, a wave 2, what it looks to be a wave 3, although we have some issues right there, clean somewhat wave 4, and then a final move in a wave 5. You have the divergence between wave 3 and wave 5, which you can see here in the RSI, which is what you want to see when you think of a market and having a fifth wave, and then the correction. Now, this correction in here is tricky because of this move in here, and I spent some time and I was trying to think, well, what if the wave 5 is here, right, instead of being right there? And I was struggling to count the fourth wave, because even if I would probably have to put a wave 3 back there, and I would have to put a wave 4, I guess, right at the bottom. But look, wave 4 terminates within the orthodox. You cannot have a fourth wave that comes into the territory of the wave 1, unless you have some kind of a triangle. There's some rules there, but bottom line, you don't want to have a fourth wave come where the wave 1 ends. And if I place this back there, we've come quite a lot. Sometimes you touch it a little bit and you bounce, but this is not good. And you don't have a triangle in here, so I can count it. Some of you might say, well, what if it's an ending diagonal? Well, it's hard to have an ending diagonal when you have impulses, right? Ending diagonals, guys, they're not an impulse. Maybe this one, the last leg in here, you can have, but these are supposed to be 3 waves when you have an ending diagonal. 1, 2, and then this, and then like that. Okay, that's how an ending diagonal is. And then you have overlap, and then it looks kind of something like that, but it's a bit tighter, it's nicer. This is way too stretched, to count this as an ending diagonal. So in my view, that's a no-no. So the only reasonable, in my view, and let me know if I'm wrong, maybe you have a different approach here, but the only reasonable way to kind of look into this is that this was the top of the fifth wave. This was the first decline, and then you got a 3-wave move, which means that's a wave B, and then you decline in a wave C, and you create, let's say, for right now, a flat formation, which means that we would look at this as being an A, B, and then down in C. Now, some of you might say, well, how about a WXY? Would you like that? I don't really like to have wave X that gets above there. I've had plenty of arguments over the years. I'm not going to do this again, but I don't like to do X waves. And it's not that there isn't the literature. I don't think there are specifications of that exactly. But to me, X wave is the one that tests the top of the B wave when you have a complex correction. So basically, I'm going to take a little break here and just kind of tell you what I mean. So if you have an A, B, C, and then you have an X, A, B, C, A, B, C. So usually this X wave comes where the wave B is, which is right here, right? So that's usually an X wave. This one makes a new high, and it's hard for me to label that as an X wave. So I will label it as a B, and that creates a bit of a, it doesn't create a problem, but here is what happens. So I can go and just do an A, B, C, and if it's a flat, and even this move in here, it's a bit weird. You can have a complex move in an A wave. You can do a WXY, fine. It's 3-wave down in A, 3-wave up in B, and then you decline in a wave C. Now this wave C, it needs to be a motive wave, right? It could be an ending diagonal or it could be an impulse. So if it's an ending diagonal, then you gotta do something like that into the end of this guy, and then eventually bounce out of here and move higher. If it's a regular impulse, and you count this as a 5-wave, 1, 2, 3, 4, 5, that's wave 1, wave 2, you got to do a 3, a 4, and a 5, which means there is more decline. I would hate to see more decline, but if the market wants to do it, what am I going to do, right? So how far can you actually go? Well, let's do a wave 2. Ideally, you don't want to pass 61.8. So 61.8 comes at about 90,599. So if the market between current levels, which is this swing right here, I'm going to put that on the chart too, and between this level right here and 90,000, we're thinking there's going to be support between 50% and 61.8. Anything deeper than 61% starts to be a problem. So first of all, we broke below this, or we're about to break. We break below the 20-day moving average, right? We broke the first guardrail. Now you're at the 52-week moving average. The name of the game is caution here. It's caution. You don't want to buy this. I mean, sure, there is a, it might get lucky. Maybe it bounces from here. Maybe you put a tight stop below this low and what have you. I don't think that's a good strategy. It could work for a little while, but it's not longer term. I think you want to see buyers come in first, prove to you that the low is in, have them start buying first, create some kind of an impulse, give it a bit of a break, and then, we can join on the upside. So from here, again, an ending diagonal could unfold. We'll see how that goes, or an impulse that's not done just yet. Now, if the market bounces from here, and this is a pure speculation, and it breaks back above this, it's going to be tricky to count this, and I'm probably going to have to do a WXY, okay, if this happens. But I assign to that a low probability at the moment. We'll see. So that's where my head is at. I'm gonna stay patient. I'm gonna wait to see, how this wave count develops. There is really no rush in here. I don't have the need to short it. I don't have the need to long it here. There is, maybe few days of break, a week, but you don't have to, unless you trade Bitcoin every day and you're on a smaller time frame, that's fine. I'm trying to catch some bigger swings, and right now that's not the environment. Now look, you had almost like some kind of a triple top. I don't believe in those, but you could say, okay, fine. You have this level here, you have this one, you got this one. You kind of have a left shoulder. Maybe the market, it does a little bit of that, and then it creates this kind of rounding top, and then you break below these levels, and then you start to crash much lower. It's possible, but one thing at a time. Again, I don't want to create multiple scenarios, but that's something that kind of goes into my mind if we continue to fail as we're moving, right? Because this could always be something like, okay, that's a wave 1 and a wave 2, a wave 1, a wave 2, and then you start to really hit it lower, right? That's why you don't want to buy something that's declining, especially below moving averages. And with this, I'm going to go and show you just a little bit, kind of the longer time frame here from, let's call it the wave to low. And one of the things that kind of came, and I looked at it, was this trend line here, which it's, it's very subjective, as a lot of things are in the markets. So you could play with it. you could say, well, I want to touch all these points. Well, if I touch this one from here, this one, and this one, you're pretty much broken, right? If I'm going just with the bottom of these guys, something like that, there is still a bit more room to kind of come lower, and you can say, well, your trend line held me out here a little bit, right? But when you have a trend line, when you have an RSI on the weekly that's right there, when you have some interesting fibs, these are all zones that could start to work. So I'm going to go with this. I'm going to go with the wave 1 and 2. Remember, when I did the video Saturday, I was explaining kind of how this wave 1 intermediate and the wave 2 red, and there was another alternate where we would be in wave 2 off of wave 5, alternate from this, I'm sorry, from this intermediate wave red. But again, that doesn't matter. It's still wave 2, no matter at which degree of trend I was looking. So if you want to revisit that, check out the video. But this is this is kind of where my head is at right now, right? We are basically at the key zone here. With this, we're at the key zone with the 98. I want to see if we're holding. If we're getting all the way into the 61.8, how do we get there if we're getting 5 waves, and how does it look? And very, very important, I do not want to get involved with this market until this is the daily, right? Until buyers show up. And that's the 20-day moving average. So buyers have a lot to prove now. The levels are being gifted right here, right? If this market is still strong and they want to hold it, they have to hold it, roughly in this area until the end of the week, right? Things don't turn around in one day, maybe, but that's why it's important to kind of watch the weekly time frames and see, what happens on Friday, what happens on Saturday, because little doubt that even if buyers come in, the market will do this over the next 2 days, right? It's not good. The likelihood of this happening, it's very small. So being patient here, it's important, and just kind of waiting for them to start to buy it and start to kind of take some of these upside levels. So these are my thoughts on Bitcoin here. And before I go, I want to just quickly take a look at the S&P 500 and just kind of show you where we are with that, because today was another bad day, and although we're in the RSI, we're still above 50, but we're starting to test the 20-day moving average. We have quite a bit of distribution. If you look, very interesting. I'm going to try to make this a little bit bigger. You see a nice little three-wave move in here. Now, it's everything starts with the three-way move, because you go up, you go down, and then eventually this becomes much larger. Then it's a three-way. Then it's at the beginning of a five-way move, right? You go 1, 2, 3, 4, and 5, and then you already have an impulse. But this is interesting, and this is what I was talking the other day. The first level of support, it's kind of that one, right? Because we've had them before over there, and then we looked at this guy as well, and I guess I was looking on the S&P or on the Nasdaq, but basically we're testing the breakout zone, and we're also at the same level with the 20-day moving average. So what happens here, we'll see tomorrow. But if we start to lose this one, then the next level again is the 50-day. So that's going to be a lot of fighting between here and here. And the way this market could top, that's why I'm saying the market doesn't top in a few days. It might take several weeks. It could be that, let's say you do this, and then you come back down, and then you do that again, and then you break, and you create again another head. You have a left shoulder. You might go back up again, and by that time the moving averages is there. The price is below it, and that starts to become more of a stronger signal that you're in a topping pattern in the market, and you might look for a move all the way back to the 20-day moving average. So again, I think these things take a little bit of time, but the signals are there, and they could start to come. So we're going to count the distribution days, and then see how the price reacts here. Anyhow, I didn't want this to be so long, so if I bored you, I apologize, or what have you. Hopefully it's helpful, but I'll talk to you tomorrow. Bye.